What the heck is going on with mortgage rates, and should you buy a house now or wait until 2023? Hi, this is Scott Hastings. I'm a loan officer in Davidson, North Carolina, and today is June 17th, and it has been a crazy week in the mortgage market and also the stock market. So, what's been going on? In general, interest rates on mortgages have doubled since, early this year. So maybe early this year, January, so rates were still in the 3% range. Monday, we saw interest rates go over 6%. Since they've settled down a little bit. But, why is that? Well, not to get too wonky, but in general, inflation has gone up and mortgage rates hate inflation. Mortgage rates rise as inflation rises. Yesterday or day before yesterday, the Federal Reserve raised short-term interest rates by 0.75 of a point. You probably saw it on the news, and I've already gotten a couple of emails and phone calls from people that say, "Oh my goodness, mortgage rates went up by 0.75." Well, that is not correct. Mortgage rates do not rise in tandem with the federal funds rate. The Federal Reserve is raising interest rates and they raise interest rates and decrease interest rates in order to stimulate the economy or slow down the economy. And right now, if you've been going to the grocery store, the gas pump, you know that inflation's 8%, maybe more. So a lot of this has been fueled by a lot of cheap money that flowed into the markets, rightfully so, over the last couple of years, to avoid a crash because of what was going on with pandemic and all that. But that's neither here nor there. The only way the Federal Reserve can slow down inflation is to raise interest rates. Well, in the 80s, you probably heard your parents or grandparents say, "My first house was in 1982 and I had an interest rate of 18%. And that's true. The Federal Reserve chairman at that time, I believe it was between 1980 and 1982, I think his name was Paul Volcker. He increased the federal funds rate, I believe it's about 18%. So now the federal funds rate's in the 3% range, to 18% in order to fight inflation, which is crazy. But what happened were the interest rates fell on mortgages dramatically. And so that's what's going on now. So the question is, what should we do about all this? Even though interest rates have now doubled and they're, say, 6%, for example, should you still buy a house? What's going to happen to housing prices? Well, a lot of people have been saying and concerned because of what happened in 2008 that housing prices are going to fall. There's a difference, a big difference between what happened in 2008 and what happened now. And a lot of what's going on now is a result of what happened after 2008. In 2008, there was plenty of houses, tons of inventory. People were buying up stuff as fast as they could. And they were using, mortgages that were not well underwritten. Investors at that time, they didn't care if people qualified or not. They just wanted something to attach a mortgage to so they could sell it and make money. After that, of course, housing prices had gone up unjustifiably during that time because it was all about speculation. People weren't even really concerned about living in the houses. They were just flipping houses. Since 2008, there has been a massive shortage of home building. People have just been scared. Home builders have been scared to build houses. There has not been nearly enough homes built to keep up with the increase in population. So what's going on now, you've seen houses rise 20% last year, and massive bidding wars, lines of people at open houses. And that just is a sign that there's not enough homes. It's simple supply and demand. So will home prices continue to increase at that clip? Probably not. Will they maybe stabilize? Probably so. Will they fall? Probably not. Unless we run out of people to buy houses, and there becomes more houses available than there are people to buy them. The simple laws of economics are that prices, won't drop. They just won't rise as much or go up as much. Well, what about mortgage rates? Really 6%, even though it's hard to imagine, is on the low end of mortgage rates over the history of mortgage rates. So even though they are much higher than they were, those were at unnatural levels. Mortgage rates in the last 2 years were the lowest literally in history. So you have to also look at the cost of waiting. If you go to rent a house now, rents are going up astronomically. I'm sure anybody that's out there looking for a rental has noticed, or if you are currently renting, your rent's probably gone up. I was looking this morning, just to kind of see, well, what would it look like if I was going to rent a house in Charlotte? I'm in Charlotte, North Carolina. And I found a house. It was worth about $500,000, and they were renting the house for about $3,500 a month. Well, at a 6% interest rate, and if you put, say, 10% down on the house, so you had a $450,000 mortgage, the taxes on that house, the principal and interest, the homeowner's insurance, etc., the payment was about that. It was about $3,450, I believe it was. So really, whether you are renting a property or owning a property, you're paying a mortgage. It's just, whose mortgage are you paying? Are you paying the person that owns the home, the landlord's mortgage, and renting and not getting any of the appreciation back? Yes. If you go and buy that house, you make the same mortgage payment as the rent would be, then at least you own a property that's going to appreciate over time. Your mortgage payments will go to pay down the balance on the loan, and then eventually one day you'll own the home, or more than likely, most people stay in their homes 5 to 7 years. You'll move and you'll have plenty of money for a down payment on the next home. What will mortgage rates do the rest of the year? It's anybody's guess. The market, really experts, wherever you looked at the beginning of this year, January, they all thought that mortgage rates would probably top out by the end of the year in the high 3s, maybe 4%. Well, we crossed that line 2 months ago. We don't know what's going to happen with mortgage rates. The best time to buy a house, to get a mortgage, is today. You can't get a mortgage rate from yesterday or earlier this year. It's already passed. It's like you can't buy a car at last year's or the year before's price. It's just gone up because of inflation. So I think at any time in the history of housing, for the most part, if you look back, even if you look back, if you bought a home in 2007, right before the housing crash, it's gone way up in value. I bought my house, of course, in 2007. I think it was the day that the housing market crashed. But, for a little while, yeah, it was the worst housing market in history. I was underwater for a while, but I ended up selling that house last year and moving, and, making a lot of money on it. And if I had waited till this year, I would have made a lot more money. But of course, the house that I ended up moving to, I would have had to pay more if I'd waited till this year. So anyway, again, my name's Scott Hastings. I hope that this was somewhat helpful, maybe gave a little bit of insight, at least something to think about. If I can help in any way, answer any questions, help you get qualified for a mortgage. Please reach out. If you like this video, I would love for you to subscribe and hit the like button. And if you have any questions at all, please put them in the comments section below. Thanks again.